Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the Australian dollar is currently trying to restore its bullish bias as the market now looks towards that cap at 74.95. In light of the massive week of data this coming week, the market will first be looking at the RBA monetary policy decision, which is on Tuesday, and it will be looking to see whether the market's minutes from a slightly dovish outlook will hold to an easing bias. However, with last week's consumer price index, CPI, which was forecast at 0.6% but came in at 0.5%, could actually dampen any kind of rate hike in the near term. So looking out to today, as I mentioned, 95 should the market, and I'll be looking for a move back towards the first support coming in at 74.25. Now a break beneath there could see further scope to the downside with 73.60 as a potential target for this week. A break above 95 would see further supply to increase as the market looks towards 75.45. With the dollar index still slightly to the bullish side, you can see here on Friday, after the numerous attempts on this resistance at 109.50-55, the market is still capped by this level. At the moment, I'm looking for further weakness to return. As you can see by these indicators, they are shaping up to a bearish bias. And eventually should see this gap filled that was created last Monday from the French election. So this pullback would see the immediate support coming in at 108.50, and then if breach would give further scope to 108.15 and then fill this gap completely and come in at 107.60 and reassess from there. In the unlikely event, we do see a break above that 109.50-55 level, which I've highlighted here, and as you can see is contained in the market, would give further scope towards 110.60-70 to 111.20, but this looks unlikely to the start of this week. However, we do have quite a lot of figures out, mainly with the this Thursday's FOMC meeting, along with Fed Chairman Janet Yellen to speak at the end of the week. And also we do have non-farm payrolls and also the US unemployment rate. So a huge week for data. So it could shift the dollar sentiment a little bit to the bullish side, that I feel the market should see a pullback in the euro. Well, as you can see, the dollar yen outlook is still capped by this 111.95.05 level. And quite a significant resistance, considering that it was rejected back in earlier in the year, in March. At the moment, I see support coming in at 111.10 and then firmer at 110.50-60, which I expect to see as a short-term bullish base. Now, a break above 111.95.05, which could see in the next coming day, would give further scope up towards 112.80 to 113.10. Well, the sterling did manage to break above that 129 handle, and that clearly gives further risk to the upside, with the immediate target of the bulls looking to at 130.10.60, which I've highlighted here, which was back in September last year. Now, towards that region, I do expect to see supply to come back into the market, purely for the fact is that we are getting to the extreme from a trend basis. At 60, as you can see, the market back here did fail when it was selling off, and then once the market bottomed out, the trend stopped, and I expect to see this eventually happen. And also it did here, when the market sold off, the trend topped out as the prices bottomed out towards the low 120. So we're not too far away. I expect to see a top, which could be, as I say, coming around 130.10.60. The support on the day comes in at 128.85 and then lower down towards 128.40. Well, the gold outlook still holding within the parameters of 12.54 to 12.68 to 72. Now, I do expect to see the market towards 68.72 to fail, and eventually see a pullback towards this, or decline to 12.54 and reassess from there. And to wrap up with silver, well, as you can see, this decline since around $18.50 is now coming not too far to the end of its run. That's currently holding above 17.10. For those that are short, it would be recommended to start taking some of your shorts back, although we could still see 16.80 as a potential target, which we saw back here in March and also back in January. But that being said, to be a little bit cautious now from a short side is the fact that when this histogram bottom here and the stochastic bottom here, we are not too far away from seeing that. So we could see a recovery in the short term, possibly back towards the region of $17.40 to $17.60. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a great day and a great start to this week.